Have you ever entered a trade that looked perfect, the setup, the timing, the indicators, but somehow, it still went against you? Chances are, you were trading against the trend. And that, my friends, is one of the most common pitfalls for both new and experienced traders. Today, we're diving deep into one of the most powerful concepts in trading, understanding trends. Because when you master trend direction, you stop fighting the market and start flowing with it. I often say that trend is not just a direction, it's the market's language, and the sooner you learn to listen, the smoother your trading journey becomes. Let's start with the basics. What exactly is a trend? In essence, a trend is simply the general direction in which the price of an asset is moving. You'll usually hear about three types: an uptrend, where prices make higher highs and higher lows, a signal that the market's in a bullish mood. A downtrend, the opposite, lower highs and lower lows, a bearish tone taking over. And then, the sideways or range-bound trend, where price is just wandering around, uncertain, consolidating before its next big move. It might sound simple, but here's where traders often slip: they get caught up in noise and forget to zoom out. A great quote by Jesse Livermore comes to mind. He once said, "A man must believe in himself and his judgment if he expects to make a living at this game." That's why I don't believe in tips. What he meant is that market direction, the true trend, reveals itself to those who study it, not those who chase quick signals. Understanding trends gives you three massive advantages. First, it gives you direction. It's your compass. You know where the wind is blowing, so you can set your sails accordingly. Second, it improves risk management, because when you trade with the trend, your stop-loss levels make sense: below recent lows in an uptrend, above recent highs in a downtrend. You're working with market structure, not against it. And third, trends reflect market sentiment. They tell you what the crowd is thinking: optimism, fear, indecision, all baked into the chart. If you've been trading for a while, you know that psychology drives everything. The trend simply visualizes that psychology. So, how do we identify trends effectively? We've got tools for that, and no, it doesn't have to be complicated. Moving averages are a great place to start. The simple moving average, or SMA, gives you the average price over a set period, while the exponential moving average, the EMA, gives more weight to recent price action, reacting faster to new market moves. When the 50-day EMA crosses above the 200-day EMA, that's often seen as a bullish signal, the famous golden cross. When it's the other way around, that's the death cross. Then we've got trend lines, the old school but incredibly reliable tool. Just connect the swing lows in an uptrend or the swing highs in a downtrend, and you'll see the market's rhythm right before your eyes. And of course, indicators like RSI, MACD, and ADX. RSI helps spot momentum and overbought or oversold zones. MACD shows you the relationship between two moving averages, a great way to catch momentum shifts early. And ADX tells you whether a trend is strong or weak, regardless of direction. But here's the golden rule: no single indicator will ever tell you the truth on its own. You've got to use them as a confirmation layer, a supporting cast to the bigger picture. Let's look at how this plays out in a real-world case study. Back in early 2021, the S&P 500 was in a strong uptrend. The global economy was recovering, central banks were supportive, and optimism was everywhere. John, a seasoned trader, recognized the opportunity. Instead of trying to pick tops or trade short-term reversals, he decided to ride the trend. He started by plotting the 50-day and 200-day EMAs on his chart. The 50 was well above the 200, confirming the bullish momentum. He drew an upward-sloping trend line connecting the recent lows. Each bounce reinforced the market's strength. The RSI was hovering above 50, and the MACD line was comfortably above the signal line. All lights were green. So John waited patiently. This part's key. He didn't chase green candles. He waited for the pullbacks. In March, when price touched the 50-day EMA, he went long around 3,900, placing a stop-loss just below 3,850. A few days later, the market pushed up to 4,000. Trade closed, profit booked. Later, in May, he did it again, entered around 4,050 when the price touched the trend line, with a stop loss just below 4,000, target 4,200, and sure enough, the market hit that level a few weeks later. Here's what's remarkable: John didn't reinvent the wheel, he didn't need to predict or outsmart the market. He just followed the trend, managed his risk, and stayed patient, and that's the whole point. In my own experience, some of the best trades I've ever taken weren't because I found a hidden setup or some secret formula, it was because I respected the trend. When you align yourself with market momentum, trading becomes less about ego and more about execution. You're no longer guessing, you're flowing. Remember what the legendary trader Ed Sekota said: the trend is your friend until the end when it bends. Simple, elegant, and absolutely true. So, the takeaway here is this: understand trends. Follow them. Trust them. They are the market's heartbeat, and if you can tune in, you'll trade with clarity, patience, and consistency. Now, I want to hear from you. What's your experience with trend trading? Have you ever ignored the trend and paid the price, or maybe caught a huge move by sticking with it? Share your story in the comments below. I'd love to feature one in a future episode.
Thank you for listening to the 101 Trading Tips in the Ultimate Trading Podcast, brought to you by bellsforex.com AudioWorks. We hope this episode gave you insights, perspective, and practical ideas to strengthen your trading mindset and improve your decision-making. Stay disciplined, keep learning, and remember, every trade is a step toward building your edge. If you found value in today's episode, don't forget to like, subscribe, and turn on notifications. Sharing the podcast with fellow traders helps us grow and bring even more free trading education to the community. Visit us anytime at bellsforex.com for resources, guides, and tools to support your trading journey. Until next time, trade smart, stay disciplined, and keep building your edge. Happy trading.